it's certainly my pleasure to welcome Lorne Jackson to the call today. And Lorne has become a very good friend of mine over the years. He is the president of Canadian National Christian Foundation. And CNCF, as we call them, has actually partnered with Kingdom Advisors and is really a founding partner of Kingdom Advisors in Canada. So they are very important to us as an organization. And I will also say that CNCF is also valued and values the relationships that they have with advisors across the country. So Lorne, let me say welcome to you today. And any opening remarks that you want to make? I want to give a quote from your book as we start, but go ahead and say hello to everybody.
Well, hello, everybody. And I see some names on the side of my computer screen here that I recognize. So great to have you join us. And thank you, Lorne, for the invite. And yeah, your comment about Kingdom Advisors being important to CNCF for sure, because I would not want to miss this saying that 70%, in fact, a little over 70% of the money that CNCF manages is managed by people just like you. So I'm in fact, you really are our customer because a lot of the times we don't even know the donor real well. You do, and we work through you. So glad to be on here today, Lorne. Thank you.
Awesome. So thanks, Lorne. And by the way, you can't get the name wrong today. All you got to do is put Lorne in the chat and you're good to go. And you're communicating with either one of us. We do have a few things in common. We're both Christians. We both have the first name Lorne. We work with advisors, and the last three letters of our names are the same as well. We're both sons. So there you go. But absolutely, in the chat box, feel free to add your comments in there in the room chat, which is in the lower right. As well, if you have questions as we go through, we'll address questions as we get near the end. But yeah, definitely, if you have questions or a chat, just put it in that as we go. So first of all, Lorne, I wanted to start with a quote from your book. And you talk about contentment in the book, and I figured this was a good place to start. You write this: after my first year in sales, and by the way, you do certainly have a long history in the financial services world, that's for sure. But you said after the first year in sales, I began my planning for year two and included a significant raise in income for myself. Each year and thereafter, for the next 2 years, I did a similar exercise, each time increasing my expected income, and each year I surpassed my goal. And I think there are probably many on the call that can align themselves with that kind of year-to-year planning and setting of goals, and even particularly around income, assets under management, those sorts of things. Here's what I found interesting that you wrote. At the end of year 3, I sensed God saying to me, Lorne, each year for the past 3 years, you said that if you could just make that much money, you'd be happy. And here you are raising it again. So how much is enough? And that's a very sobering question considering the source, and it's God really prompting you or nudging you and asking you that question. Then you said, I made the decision right then that I did indeed have enough and that I would be content. Now I didn't stop working, nor did I try to reduce my income, which is interesting. I simply stopped being driven for more and relaxed in what God had provided. The difference was in my attitude. So, Lorne, I'd like to have your response, your comments on that, the whole idea of the question, how much is enough, and also how contentment plays into that.
Yeah, that's a big one. It's so important. And a buddy of mine, every time I bring it up, he goes, oh, you're not going to get into that how much is enough stuff again, are you? and then he'll always quickly say, like, I know you never stopped working. You didn't stop building your business. You didn't stop growing your company. No, I'm not saying that. I never said that you should stop growing your business or stop growing your company. What I said is I stopped being driven towards it. And I think that was the difference. It was that time, and from that time until this day, I'm a pretty happy camper. You know, the Lord has blessed us. We've had some tough times. Yes, we had we've lived through 4 months of unemployment and no paychecks. And I always tell people, yeah, in those days I had a mortgage, a car payment, and a wife and 2 kids. But we tithed our income that we got, the little bit of unemployment insurance check we got throughout that period of time, and came out the other end, didn't have a penny left in the bank. But hey, guess what? We didn't start with any, so that was okay. But we made it through that time and never got behind on a bill or anything else. And I immediately learned out of that God's math is different than man's math. So the how much is enough question is also the same. And a lot of people don't ask themselves that question. And so I would encourage everybody that as you're building your business, how much is enough? And one of my buddies that I know well has grown his business or income from like 50 grand when I first knew him until today. His gross income to his company is over $1 million. And he's still driving the same driven. And I keep saying, when are you going to say it's enough? And the how much is enough question then comes into play. Well, if I've got more than enough, let's start giving some of it away. Let's give it away now. Don't wait. Don't stockpile it up till I die. We know what the Sermon on the Mount said. You know, if you lay up treasures in heaven, they will be kept. But you lay up treasures on earth, and rust and moth and corrupt will be corrupting them. And the word that the Bible actually used in the Greek for rust is it eats it away. So it's all kind of like eaten up anyhow. So
the three questions, Lorne, that's asked by Ron Blue that everyone needs to answer is who owns it, which you touched on, how much is enough, and is the next steward chosen and prepared, which obviously is a big question and one that it's important for advisors to be challenging clients with. And I wonder how often are those questions not being asked?
For sure. Psalm 24:1 says, the earth is the Lord's and everything in it, the world and all who dwell in it. And I always like to say to people, so that's what Psalm 24:1 says. Let me sum it up for you. God owns it all. That's really what that's saying. So, and then the question, how much is enough? And yeah, is the next steward prepared? I think we'll talk about that as we go. Yeah, you got some slide up there for it now, but I think that's a really important question.
So the how much is enough, and this is the accumulation, but I guess the how much is enough you talked about earlier is there's 2 areas when we ask the question, how much is enough? One is around income, which you obviously touched on in your quote from your book. So we need to really be considering putting a cap on our lifestyle, but also it's the how much is enough with the accumulation of wealth, so that when we have accumulated enough, then it's like, okay, where do we go? And on this slide, that's the point where you move beyond the accumulation phase to preservation or speculation, but also the giving can come into that equation right there as well.
Yeah, for sure. I think that's a very important part. And when I talked, as many of you that know me know that I would be connecting a lot with donors of different charities, and we help them give to those charities out of their will and their estates. But I like to encourage them to give away now. So I'm always saying to them, let's not wait until you die to give away or to give to your kids or to give to charity. If you have more than enough, let's start doing that now so that our kids, so I encourage people to say, look at your kids, and maybe you should be helping them pay down their mortgage so that or help them send your grandkids to Christian schools. Those are good things to be helping with now, rather than wait till I die and they get a whole bunch of money. Well, hopefully if I live to kind of normal lifestyle or normal age, since my parents both lived into their late 90s, I'm hoping for the triple digit, but we'll see what the Lord decides. But with that means my kids are going to be in their 60s. Will they need my money when they're in their 60s? Probably not. So let's be giving to them now and help them pay off debt and all those kind of good things. So yeah, it's not just about accumulating more and more and more. It's about who can I give some to? Help out.
Yeah, I know we had a session of core training last week, and we talked about, or actually a couple of weeks ago now, and we talked about the idea of accumulating wealth versus the idea of distributing that wealth, which is a whole different perspective. And I think most financial advisors, whether Christian or not, have a focus on the accumulation of wealth, not as much on the distribution of it. But the distribution of it is probably as important, maybe even more important. And even the process here, and I wanted to bring up this slide, Lorne, as you respond to that. But this is kind of the process that we need to work through with clients in regards to transferring wealth. And the reality is, very quickly, many financial advisors start at decision 5, which is the tools and the techniques, which we're going to get into a little bit of that. But talk to us a little bit about, and you have kind of mentioned it, the transfer decision, how you're going to treat your children, the timing of it. Should you be giving now as opposed to waiting? So love to have your thoughts on that.
Yeah, I think this is a great slide. I actually use I use this very slide in some of my webinars that I do with donors when I'm talking to donors as well. But you're very accurate, Lorne, I think, when you say that a lot of advisors jump to number 5. But here's the key. When you get into things like life purpose, you have now tied this client into you. They're not going anywhere because nobody else is talking to them about that. You would be surprised. When I talk to our estate advisors, we have estate planners on staff who provide this service. We pay them a salary to provide this service to these donors of the different charities. But when I talk to them, it's not unusual to hear them say, in fact, one the other day said to me, Lorne, it always shocks me when I talk with Christian families and they'll have one child that might be errant, that may be a gambling problem or an addiction issue of some other nature. And they'll say, I'll ask them, how do you have your estate set up now? Well, it's equally divided between our kids. And he said, when I asked them, well, will that help that child that has the addiction problem or hurt them? Well, no, it would hurt them, but I didn't know what else to do. See, nobody's having that conversation with them to help them think through some of those family issues and what their purpose is in leaving this behind. So it would be very helpful if you guys are doing that. And it'll also tie them to you so tightly, they're not going anywhere else. Because as I said, nobody else is talking about that stuff. That's what they need help with.
Yeah, and these are the questions, Lorne, that you've kind of raised in an indirect way. The first one, the important one, what is the worst or the best thing that can happen if I transfer this amount of money to this heir? And how serious is that, and how likely is it to occur? And I know asking that question can be challenging, but I think it's worthwhile asking because it really allows you to go deeper in conversation with your client.
Yes, absolutely. And there are answers to that. You can help them with that, with a trust or some of those things that you can set up to help them, because otherwise, they're stuck. They're going, well, I don't know what else to do. I didn't know there was another way I could handle this.
Mm-hmm. Yeah. So I guess we've hit on something, that's pretty important, is the conversation that financial professionals need to be having with clients. And I'd like to ask you, Lorne, to kind of zero in on the generosity conversation and even tell a quick story, if I might, about how you were able to help me. Because one of the most fulfilling appointments that I had was with a client, and I knew they were givers. They were interested in giving, and they were in the process of selling their business. And what it would mean is that they would have a significant capital gain. So their thought was, let's invest the proceeds after paying tax. Let's invest the proceeds, and whatever money we make on that, we want to give it all away. And I remember contacting you, and your thought was more, well, now is the time that they're going to have a tax bill, because they were selling a real estate company, so they were going to have a tax bill. So you asked me if it would make a lot more sense to engage the accountant and have the accountant zero down or bring the zero tax amount. How much would need to be given away to get them to zero when it comes to paying tax, and invest that amount of money, give all that amount of money away. And I remember sharing that with the clients, and they were just absolutely thrilled at the possibility of, number one, reducing the tax, but number two, being able to give more money away up front. So I think that was a great example of how you were able to help in that situation, just with a small piece of advice, to bring that into the picture. And I remember they wrote a check for $100,000 to give away. And it went into a donor advised fund. So I don't know if you want to comment on that specific example or on something else, but that's an example of how a donor advised could work, and how a financial advisor can have a great sense of fulfillment. I know I've been there and experienced it. And it was probably one of the greatest thrills of my life, recognizing that I had helped the client give this chunk of money away. And that was only their first amount that they were doing, because it was the first piece of property they sold.
Mm-hmm. Well, maybe I'll just touch on another one that we actually dealt with. I had a guy call me one day it was October of that year. It was October, and he called me. He said, Lorne, I just sold my business. He said, I've got to give away $2 million before the end of the year. He said, the problem is I have no idea what charities I want to support. I don't want to give all that away between now and the end of December. But he said, I need a receipt before the end of December. So he said, I have a proposal I'd like to make. He said, I own a home that I don't need. It's an extra home. I've been trying to sell it. I haven't been able to sell it. So could I donate that home to you? And also some public stock when I sold my company, I got a bunch of public stock. So if I gave you the home and public stock to bring it up to $2 million, can you give me a receipt for that before year end? I said, yeah, no problem. So we had an appraisal done of the home. The home was appraised at $1.1 million. So I gave him a receipt for $1.1 million for the home. And then, and by the way, the home was rented out to somebody who was renting it, and they were paying a monthly rent, which was quite substantial. So that monthly rent went into his donor advised fund. Actually, it was about $6,000 a month, and that went into his donor advised fund until that next June. So that was October till next June, and then we sold the house and put all of the money from the sale of the house, which was $1,060,000 actually. So it was pretty close to the 1.1. And then the rest of it he gave in public stock. So he told me afterwards, he said, I paid way more than that for the house when I bought it. But he said, when it all came out in the wash, and he said, I got the credit for the public stock with the appreciation in it, not having to take any of that into income. He said, the whole thing, I pretty much broke even because I was able to do that through you. He said, had I been able have to sell the house and cash in the stock and give it away, it was going to cost me a lot of money. So he said, this was a good way to go about it. So he was quite happy in the end. And now here was the key. It was October. He needed to do it before year end. We were able to do that. It took him about 3 to 4 years after that to give that money all out to the charities he wanted to support. So that's where it bought him some time. And by the way, some of the money he gave out anonymously because he decided he wanted to pay off the mortgage on his church that he attended, and he didn't want anybody to know about it. So we paid off the mortgage on his church and used his donor advised fund to do it, and it was always anonymous. So there's all kinds of neat things you can do that way and to help a client out with their giving and their business.
So you've highlighted several items that can go into a donor advised fund, as well. Different uses, like, for example, making the gift anonymous. Like, how significant are those things, and how important are those things to donors?
Yeah, we have some donors who all give all their giving anonymously. They don't, and part of it, it's too bad to say this, but I think you'll understand. So part of it is because they don't want all that junk mail afterwards saying, "Oh, can you give us some more? Can you give us some more?" I remember a charity that I gave to a few years ago. I will leave it unnamed, but I gave a rather substantial gift because I was so caught up in the work that they were doing. And for the next 2 years, I got buried about 2 times a month from more ask. until I said, I'll never give to them directly again, because they just buried me in mail. But yeah, I think the anonymous giving is very important for some. It might be for different reasons, though. It might be to pay off the mortgage on their church, and it could be that they just don't want anybody to know what they're giving. They don't want to get all those other. And by the way, one of our donors gives to us a large gift, and we write checks to about 90 different charities. Why would they do that? Now, it's not anonymous or anything. Well, because they used to chase all over trying to get all their receipts. Now they don't have to do that. They get one receipt from us for the amount that they give us, and then we write checks to all their charities upon their request, and we don't need receipts, so the job is done. Makes it easy.
So you've given us a couple of reasons why you should use a foundation. Are there other things that you'd like to add to that? And as well, the question, why should you use a Christian foundation?
Yeah, that's a great question. Before I answer that one, let's just add a couple of things. I think I touched on it a bit with the one that I told you about, the guy giving us the house and so on, but maybe it's a large one-time tax issue you've sold a business, or you sold a piece of property and you got this huge tax issue, sold a piece of real estate, whatever it is. This is a good way to do it, because then you don't have to give it all out at once. And in fact, sometimes we have people who will put money in and they keep it there for quite a few years. They just, now, I'm sure we're going to get into this, but we would want you managing it. If you're bringing the money to us, we're happy to have you manage it on our behalf. So I think that would be important for you guys to know as well. But yeah, I think there are a lot of reasons that they would give it through a foundation. But a Christian foundation, let's just deal with that one for a minute. Let's suppose that you've got some money with the local community foundation. And let's suppose that maybe it's either now you've given it, or it's in your estate and the gift goes to the local community foundation. And let's suppose that one of the charities that you want to give to is Focus on the Family, a good Christian charity that does a wonderful family discipleship and teaching. So that's maybe one of your charities. But you're already graduated to heaven and you left this money behind to focus on the family. And when the time comes, for whatever reason, let's suppose maybe Focus on the Family Canada no longer exists. So now what happens is the board of that foundation has to choose something similar. That's what they're supposed to do. If they can't give to the charity of your choice, they should be choosing something similar. Well, if it was a non-Christian board, they might think that Focus on the Family and Planned Parenthood sound the same. Let's just give it to Planned Parenthood, which of course we all know is very different. Mm-hmm. So I think that's one good reason I'd want to be choosing a charity, or a foundation in this case, that has a biblical worldview that is similar to mine, so that I know that if I'm not there to advise, or my kids are not advising, that at least the people on the ground that are there know the kind of biblical worldview I had, and they're going to continue to follow that through. So to me, that's a very big one in dealing with a Christian foundation versus maybe the local community foundation.
You do have a few slides, Lorne, as well to share, and I think it answers the question, 5 reasons to use a foundation generally. And I don't know if you've touched on these already, but let's kind of just go here. And if this is sure. Most on the call understand how a donor advised fund works, but let's walk it through very quickly. And as well, a couple of questions have come in already, but we'll deal with those questions shortly. But if you have them, put them in the chat box as you would. So Lorne, okay. Just walk us through this.
Yeah, so this is just a simple kind of arrow diagram to show you how it works. Sometimes when I'm talking with donors, they're not quite clear on how this works. So the number one is the contribution. So the person writes a check, or maybe they have a mutual fund with you already, or a segregated fund with you, and they want to donate that so they could gift that to CNCF. So all of a sudden, maybe that never left that mutual fund you had it in. It just stayed there. but the name changed on the file. It changed from Joe Donor to CNCF. So that's the contribution. And the moment that that changes to our name, we issue a, it says a deduction. It's actually a credit back to the donor at that time. And then we administer that from that point on. That money now is in CNCF. We invest it. If it's in your mutual fund that you had invested, you continue to invest it. And the grant making comes out of that fund then as the donor chooses to give to whomever, and whenever they want to give. That's entirely up to them.
Yeah, good. I thought this slide was interesting as well, Lorne, which is basically a gap going back to the conversation and the importance of having the conversation about generosity with your clients.
Yeah.
And go ahead.
So this was CAGP, so Canadian Association of Gift Planners, of which we're members and involved with. But so you may have seen this or not, I don't know, but they did a survey and it said 91% of financial advisors say they discuss philanthropy with their clients. But when they interviewed the clients, 13% said yes, they've actually had that discussion, which is a huge gap. So either the discussion isn't happening, or the client doesn't really recognize that it's happening. So that gap needs to be filled in. And then 74% of donors say, though, that they would like to have that kind of discussion with an advisor. So there you are. I mean, the donor has nobody, they don't know where to turn for this. I've had them tell me, well, we didn't know who to ask about this because this is not the kind of thing that our financial planner usually does. Well, that's unfortunate. That's an opportunity for each of you to be in there. So yeah, that's a good one. Let me just move on. Here's some reasons that I think this helps you. Okay, it's more services to your client. So it's the more things you can be involved with in your client's life, the tighter you tie them to yourself. And if you don't do it, somebody else might do it, and now they become the competition. So it also prevents that competition. It helps your clients with those philanthropic decisions, which I've already said that the slide before, a huge percentage of them are saying, I wish I had somebody to help me with that. You continue to manage the investments, and it will separate you from the rest because not very many are doing that. We have the assets that we have are managed by a very few of you advisors. So more of you could actually be involved in this. So I want to run this one through quickly if I can, just so, because oftentimes when I talk about this, people go, well, yeah, but if I encourage them to do that, then they're disinheriting their kids. Oh, really? Well, let's just look at that. And this is just a concept, gang. I mean, a child called charity is the concept, but don't worry about that. Just watch the numbers. So this was an actual estate we worked on. The estate was about $1.3 million. So you can see there the net after-tax estate when we first met with them was going to be $1,096,000. So roughly, I think it was pretty close to 300,000 of, $1.3 million of gross estate. But then the tax had to come out of that. So here's how their will was set up. Pretty typical. They had 3 kids. We said it was written just to divide equally between the 3 kids. So that's, had they died in that position, that's what would have happened. However, when we started talking to them, they said, well, we'd like to leave something to charity, but we don't know what would be the best assets to leave to charity. Bingo, there's where you come in. What would be the best assets for tax purposes to leave to charity? And we don't know how to tell our kids they're not going to get it all. So that one you can help them with as well. But here's a good example. So their estate of $1,096,000, we said, well, divide it 4 ways. Then the charity would get $274,000. Each of your kids would get $274,000. And we're not finished yet because once your estate pays out $274,000 to charity, it creates a tax credit. And notice the numbers on the right changed. There's no longer $274,000 going to the kids. It's now $314,000. So we were able to say to this couple, so if your kids got $366,000 to $314,000, does it really make a difference? And they said, no, I love it. Because they said, now I can give $274,000 to my favorite charities where I had nothing before. Now, you'll notice our estate's still not back up to a net of $1.3 million. We could have gone further. We could have given away more. But they like this balance because it didn't take the kids down all that much. Still left them up over 300, and then the charity is getting 274. So I like to show that just so that you know that, okay, we're not disinheriting the kids. We're not getting on the wrong side of this couple's kids. Not at all.
That's awesome, Lorne. I appreciate that. I just want to jump into a couple of questions while they're coming in, because there are several there now. You want to just do this slide first on giving stock versus cash?
Yeah, I think most of you on this call, on this webinar, would know about this, but it's always good to just look at the difference. So if you look at this and say value of the stock to give, let's suppose you have a client who has $100,000 in Bell Canada stock, doesn't really need the money, wants to give it away. In fact, I actually saw this happen, and he went to his church and he said to the treasurer, "I'd like to give you this 100,000 of stock." And the treasurer said, "Well, we don't have any way to handle stock, so go sell the stock and bring us the cash." So he actually did. So what you see on the left side is selling the stock, paying the $16,875 in tax, and then donating the remainder to the charity. Now you can say, well, when he gets that charitable receipt for 83, he does his tax at the end of the year, he's going to get that back. Well, yeah, maybe not, depending on what other income he had. But a lot better deal would have been to say to the treasurer, "No, I'm not going to do that. I'm going to give you the stock. You find a way to sell it, because here you go." On the right-hand side, what you see is the same 100,000. And here's the difference, folks. One way the donor, and I can see some of my numbers got whited out here, they didn't show up, but one way the donor gets a receipt for 100,000, the other way they got a receipt for 83. The charity gets 100,000 or the charity gets 83. So everybody wins by giving the stock, which is why we're always encouraging you, if you have a donor who has some money in a mutual fund or a stock portfolio that has appreciated in value, that you give the stock to us and let us sell the stock and turn it into cash, and then there is no tax at all, and everybody ends up better off. So the only people that lose is Canada Revenue Agency, and they seem to have lots of it because they give it out every day.
Yeah. And most advisors are not too sad about sending less because it's to CRA, because it's a big part of the planning process, obviously, and certainly one of the goals, and maybe even a motivator for the client. So let's jump into a couple of questions, Lorne. I do have some more here as well, but some that have come in. What are the parameters of where to give? Clients will obviously ask advisors that. Is there a list, and how is it determined?
Yeah, that's an interesting question. So I've been doing this now since 2002, so almost 20 years, and I've never had. So we have over like 200 donors using the foundation. I've never had one time where they've said to me, "What should I give this to?" I find in the Christian community, most donors know who they want to give to, or most clients know they have charities already that they're supporting. They're funding their church and maybe 3 other charities, because on average it's usually about 4 charities. But I've not been asked that, so that's a heart issue, and you can dig into that with a little bit of what makes you. Here's some questions. What makes you laugh? What makes you cry? What makes you mad? That'll get to the heart issues, and it will help them determine if they have no idea what they want to give to, which is kind of rare in the Christian community because they're already giving probably. But if they didn't, there's your chance. And if they are not Christian and maybe haven't been giving, well, there's still the good questions to ask. What are those things that make you cry? What makes you laugh? And what makes you really mad? And now you'll know where their heart is.
Mm-hmm. Which is an important point, which I always say it's the reason Jesus talked so much about money in the first place, because his desire was to get to the heart, because God does look at the heart, and money is definitely a heart issue. Further to that question, Lorne, are there restrictions on where the clients can direct their funds to different charities with CNCF?
So let me answer that this way. There are restrictions, of course, because we're a Christian foundation. So it would have to be something that didn't go against our Christian faith. But other than that, no. So we have people who use it to give to universities. They give to hospitals. They give to the Boys and Girls Club. All those kind of things. As long as it's not something that would be against our statement of faith, we can give. And by the way, one of the other differences with us and a lot of the community foundations you would find, and maybe even some of the ones run by banks or fund companies, you can put $100,000 into CNCF today and you could give it all out today. We have some who will do that. They will put a lot of money through us every year, but they want to give it all anonymously, so they put it in and they'll give us a bunch of public stock. We sell it and they give it all out maybe the very next month. So you can do that with us, where we don't have any restrictions on how much you have to leave in there. So here's just an example. We don't have any restriction on how much you have to pay out either. Most foundations are in the box where they have to pay out 3.5%. Well, we do too, but it's 3.5% of our total aggregate of all the money we have. Well, last year we gave out 70% of all the money we have because of the money that came in. So we ended up, we bring in last year 22 million and gave 29 million and gave out 22. So we're well ahead of the 3.5%. So if a donor says, well, I want to save it up in there for a while, let it grow. Well, guess what? There's no tax on that growth. That's growing in their tax sheltered, and they can give that now out to their favorite charities. I should say tax-free because it is tax-free. Nobody ever pays the tax on that. That's theirs to give out to charity as well. So although the foundation charges a 1% per annum fee to manage all this for you, if you've got it invested with you, you're certainly making them more than 1%. So they're going to have that fee taken out and still have lots more over and above that they can give out to their favorite charities. So, yeah.
So basically, you answered one of the other questions that came in regards to a minimum disbursement, because basically, I guess there is none because it's met by the pool, is what you've explained. And you're giving out, obviously, a significant amount, 70%. That seems like a pretty high amount for most foundations. Now, you would know what other foundations are doing for sure, but to me, at least, that seems like a high figure, which means kind of I know one of your goals in talking with you is to flow through the money so that you're a conduit of the funds in giving. So I'll add another question. You can comment on that, but I'll add another question as well. For non-Christian clients, what's the best way to explain why we are advising them to use a Christian foundation?
Well, and depending on what they want to give to, you may not want to choose a Christian foundation because they may want to fund things we wouldn't be comfortable funding. I will not mention any names at the moment, but if that's the case, maybe you should be recommending the local community foundation where they can fund those kind of things. But it's helping them help them come to grips with their philanthropic goals and helping them find ways to get that done. Because it still ties them into you, whether they use CNCF or somebody else. It still ties them into you to be getting involved in that kind of thing. So I think that's good. Yeah. Good question.
Yeah. Okay, good. If it doesn't answer your question, then please follow up if you would. But there is a question regarding cost structure. I know you touched on this, but if you could clarify a little bit more, outlining the cost structure, management fees and transaction fees for an immediate sale, and B, for longer term hold of the funds inside the foundation. So annual fees.
Yeah, it's pretty simple. It's pretty easy to follow. We used to have layered kind of stuff and made it difficult for anybody, including ourselves, to figure out. But now it's 1% per annum, up to 5 million. Once you go over that, we talk. Depending on how much money you're talking about. But so in most cases, it's going to be 1% per annum. There is no other fees. There's no disbursement fees. There's nothing else. That's it. All done, all in. So 99% of what you've got there is yours to give out. plus the earnings that you've got if you're growing it in there. So there you go.
Yeah, good. One comment is CRA doesn't really have a restriction for the management payout, but some financial institutions have a maximum payout, typically 8% in the first 10 years. Do you have a comment of that? Because I think that's, and then there are other foundations that we want to explore as well. But yeah, the maximum payout idea.
Yeah, so I expect the person is saying that CRA doesn't have a maximum amount you can pay out. That would be true. They do have a minimum, but they do not have a maximum. But you're correct. Some banks and stuff are trying to hold the money back. Hey, listen, you guys on this today all know about the banks, and you know I'm not a bank lover, so I'll be honest. So if you ever thought the banks were in this to be philanthropic, hello. You need to go check out your bank. They're not in this to raise money for charity. They're in this to raise money for the bank and their shareholders. That's what that's all about. So they're wanting to hold the money back, keep the brakes on, and keep the money in there as long as they can. We had one of our suppliers of goods and software to us, when he found out how we operate and how we would pay out like 70% of what we've got in a year, because of the amount that came in, we were able to do that. And he said, boy, you guys really are a faith-based organization, because he said, you got to have the faith that somebody's going to put it in again next year so you get paid. Yeah, that would be true. It would be better for us financially if we kept it all there. Mm-hmm. But our board is so ingrained in this that they did a study, and a lot of you would know Jonathan Wellham, who used to be the president of AIC Mutual Funds, is on our board at CNCF, and Jonathan did a study, and him and his team, because he's the investment head of our investment committee. They did a study one time on endowment funds and said, is endowment funds even biblical? Well, I got some good news for you. The answer is yes and no. So how do you like that? Yes and no.
That's the answer. That's the type of answer we love. Yes and no. Are you going to clarify more, or are you done?
No, that's good.
Okay, so another follow-through question regarding, is there a minimum size for a donor-advised fund?
Yeah, so good point. 25,000 is the minimum for if you're going to manage it for them, because we just find that we have great difficulty trying to get quarterly statements and stuff sometimes from some of your dealers. You guys are good, but it's the dealers that can hold things up. But yeah, 25,000 is the minimum. But let's see, that's about it, I guess, as far as minimums.
Okay. So if money flows through immediately, a donor wants to put money in immediately, but almost immediately wants to flow it through. Would that still be a 1% charge, even though the money is virtually there for very little time, put it that way?
Yeah, yes, it would be the same, because it really doesn't change our work. Whether your money sits there in your account that you're managing on their behalf, or the money flows through us and we write 20 checks. We write 20 checks right away, or we write 20 checks over the next 3 years, same amount of work. So, and it does fund some other charitable work that we do in helping churches understand biblical stewardship. So we have a lot of training and stuff on that in a totally separate charity. But yeah, so the monies that the foundation makes, that's what it does with them. So we would be 1%, and that in that particular case, the 1% would come out before their gift went out. If the money stays there all year, it would be 1/4 of 1% each quarter. So it comes to us throughout the year, not all up front.
And I guess in the thinking of the advisor, what probably it would be good to actually communicate that you're using a Christian foundation. So even that 1% charge is really supporting a Christian ministry. So I think it's probably good to position it that way. Would you agree?
Yeah, very good point. Because We have a lot of biblical stewardship training material under the name of Compass, and all of the work we do there and the staff that work in that area are funded by money we can make from the foundation. So yes, that's a very important part.
Yeah, and I think, a lot of people are very, very conscious over fees now, advisors particularly, because they're having to compete. So, if you have a mutual fund that's managed at 1%, 1.5%, or 2%, and then you go into a DAF and you're paying a 1%, you just got to try and keep up with the whole thing. So the conversation can be a little bit challenging. So,
I understand that one.
Yeah. So how can a donor advised fund be a great part of an estate plan? And I guess what would your advice be to advisors in that area talking to their clients about it?
Yeah. So when it comes to the estates, there's some interesting stuff, and we know about the graduated rate estate issues and all of that kind of stuff that came down. I think it was 2015. I would usually recommend that you use what I call a letter of direction. So if you're working with somebody and they're putting their will together and they say, well, I'd like to leave money to my church and these other 3 charities that I want to give to, can you help me understand how best to do that? Or they maybe say, I want to make, here's one a lot of financial advisors do not seem to be aware of. Revenue Canada a few years ago said that you could actually name a secondary beneficiary on your RRSP or RIF to charity, and if that was the case, the money would go directly to charity outside of your estate, and no probate, no executor fees, all those good things, because it's a named beneficiary. So you could have 2 beneficiaries, one be your spouse, the second one be charity. And that can be the right thing to do. As I say to donors, so should you go out tomorrow and change your beneficiary, add a secondary beneficiary to your RSP? Yes? Well, maybe. Maybe not. It will depend on what other assets they have, of course. So that's why it's important that somebody like you help them make those kind of decisions from a tax perspective. So I think that that if you're having 4 charities in your will, or on your RSP, it's kind of hard to put 4 charities in as my secondary beneficiary. So again, I might want to use the foundation to do that. And a letter of direction does that very nicely. So here's what a letter of direction says. That when I pass away, I want you to give this money that goes into the foundation to these 4 charities, and here's the percentages I want you to give. Now let's suppose 10 years go by, the couple changed churches, now they got to change their will. Well, if the name was in the will, if the name of their church was actually written in their will, they'd now have to go add a codicil to the will, and they didn't get around to it and all that stuff. Whereas if they'd had a letter of direction, so their will would say, I want all of my charitable giving to go to the foundation. Now I put a letter of direction on file with the foundation that says, give to these 4 charities in these amounts. Well, now I change one of the charities. All I got to do is create a new letter of direction, and I've solved the problem. So one lawyer I talked to said, I hate codicils, because he said, I charged my client $150. I feel I lost money. The client's mad because they think I charged them too much and nobody wins. So he said, I love letter of direction because it solves all that problem.
Right.
So that's a good way in an estate to help your donor in using a foundation called a letter of direction.
So it really should be, a donor advised fund should really be established prior to death, correct? I mean, it's like what you're talking about now is when they die, okay, a letter of direction and it directs the funds. But I guess it really makes sense that the donor advised fund is already in place. And I wonder how many people out there are not aware of the benefits, and even advisors not necessarily aware of the benefits and I guess ease of use of using a donor advised funds as opposed to a client just giving here and there, as we've talked about earlier, and so many receipts to track and so on.
Yeah, I think here's the other thing though. If you set up a donor advised fund now, here's a great way. We haven't talked about this yet, Lorne. Preparing the next steward. Is the next steward prepared? I think it's Proverbs 21 says, an inheritance gained too early will not be blessed at the end. Wow, what does that mean? Well, that means that the next steward wasn't prepared, and they got this big chunk of money and they blew it. So I think it's very important that you can involve your kids, even as small kids. So we have some donors who will set up a foundation and they might give out $5,000 a year to different charities, but they'll get their kids involved with them. And they sit down once a year and they decide, okay, here's what we're going to give to this year. So the kids get a part in that, even young kids. Older families, come together and make these decisions together with the foundation. That can be a great way to be preparing the next steward for what is it that mom and dad give to, why did they give to those things, and all of that kind of stuff, and helping prepare the next steward. So it's a good way to go about it as well.
Basically, what's different about CNCF? There was another comment that came in about differences in CNCF as opposed to other foundations, whether they are Christian foundations or secular foundation. What really stands out in regards to Canadian National Christian Foundation?
You mean besides me being president?
Yes.
That's a joke. That's a joke. There's two really new recent ventures that we've gone into. Most of you would know that in Canada, we're the most draconian country in the world when it comes to managing charitable giving. We use these words direction and control. So when a donor gives money to a charity in Canada, the charity they give it to has to maintain direction and control of those funds. So therefore, you can't, as most of you would know, you can't give money to a charity in Canada, have them give it to somebody in the U.S. and get a tax deduction for it or tax credit for it, because that creates a problem. Well, we can actually. We have a partnership with a subsidiary of our friends out of Atlanta, the National Christian Foundation, which we're close friends with. And we've set up a partnership with one of their subsidiaries called TrustBridge International, or TrustBridge Global, sorry. And TrustBridge Global, what it does is allows us to partner with them to give to pretty much any nation in the world. So if a donor was in Canada and said, I want to give money to a charity in Asia, in Africa, in South Africa, in England, we can make a way for that to happen, and they actually get a tax credit for it. So that's one new thing that we're working on, and we have now in place. The other one is the big talk today is impact investing. And really what impact investing is somebody can help a third world country, a company in a third world country, grow their business. So maybe you've got a farm in South Africa that needs to raise some funds, but they need $500,000. The banks would gouge them. They can't get the money. So maybe if you've got $500,000 in a CNCF donor advised fund that you already got $500,000 tax credit for, you could now invest that overseas in that farm and help them get going. Now, without getting into all the logistics of that, CRA says that's okay as long as we have expectation of getting the money back. We have interest rate commensurate with the rate in the country, and some form of expected repayment. Now, it also says in the CRA website that you may not get it back because it may, you're investing in third world country. It may get lost. It may just disappear. Maybe the farm goes broke. But there has to be an expectation that you're going to get it back, even if you don't at the end. So that's called impact investing. So I'm finding a lot of people have interest in that, especially business owners who are giving generously in Canada. But if they were to go and invest in that farm directly, they don't get a tax credit, and they could still lose the money. Whereas this way, they get a tax credit and get to invest in that farm. So yeah, impact investing is a new thing and seems to be really getting hot in the U.S. and now in Canada as well.
So what I'm hearing you say, there's not actually a list of charities in the US or other parts of the world that you have to go through to make donations outside the country?
Correct. So it would go through us to TrustBridge Global, and TrustBridge Global and us have a software system that manages all that. So that, because there's all kinds of reports and stuff have to come back every quarter from the charity that goes to, and they get that software as well, and they report it straight through the system to us so that we can track that. And we have an agency agreement with TrustBridge Global to be able to do that, to make it legal for CRA purposes.
So, Lorne, I want to thank you for taking the time today out of your schedule. And I do want to say, Lorne will be, I was going to say Lorne will be in Florida at the conference, but Lorne will be at the conference for sure, because CNCF, for the first time, they've always been at our one-day conference, but they've never been at the annual conference. I mean, Lorne has always attended that conference, but never as a partner. This year, Lorne is there as a partner. This is a virtual event, but you're going to have a great opportunity to connect with our partners and others in the event as well. So I really want to encourage you to connect. If you don't connect with Lorne before then, to connect during the conference and definitely visit the booth. So thank you very much for joining us today. Have a great rest of your day. And we will see you likely at one of our study groups this month. And if not, see many of you, most of you, at our annual conference starting on February 17th. Blessings to you, Lorne.
Thank you.
Thank you so much, everyone, for joining us.